where there's these explosive periods of price movement from January to about May. Summer is usually sideways, and then towards the end of Q3 and into Q4, we get these kind of explosive parabolic moves again during bull market. Regardless of whether it happens in August and September or it happens in November and December, it is very unlikely, in my opinion, that we have seen the top of this Bitcoin bull market. It's much likely that we will go higher at some point over the next 18 months. If you get, let's say, 1% of 10% of corporate balance sheets in America to go and buy Bitcoin, that's a lot of buying power. And so for an asset that is, $1.2, $1.3 trillion in market cap, you don't need that much buying power to continue to move this thing upwards.
Anthony Pompliano starts by addressing the fundamental factors that influence Bitcoin's price. He explains that the most basic reason for price fluctuations is the balance between buyers and sellers. When more people are selling than buying, prices tend to drop, and vice versa. He emphasizes that changes in interest rates significantly impact this balance. If investors believe that the Federal Reserve will not cut rates as much as previously expected, assets like Bitcoin, which often thrive in low-interest environments, might not perform as well. However, Pompliano points out that despite the Federal Reserve raising interest rates from 0 to over 5%, Bitcoin has still managed to see substantial price increases, indicating that other factors are also at play. Pompliano discusses the seasonal trends in the cryptocurrency market, noting that Bitcoin and other cryptocurrencies often experience sideways summers. Historically, the stock market tends to slow down during the summer months, and Bitcoin has mirrored this behavior. Explosive price movements typically occur from January to May, with more parabolic moves often happening in the latter part of the year. This cyclical pattern, he suggests, might catch new investors off guard, especially those who are not accustomed to the high volatility of the cryptocurrency market. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, I think there's a whole bunch of factors that go into price, right? And at the most basic level, the price goes down because there's more people selling than buying. And so the question becomes, why are more people selling than buying? And really, I think some of the things you talked about are key drivers. If people think that the Fed is not going to cut rates as often or as severely as they previously thought, then assets like Bitcoin tend not to do as well. With that said, I think interest rates going from 0 to over 5%, but still seeing Bitcoin's price go from 15, 20,000 all the way up to 60 or 70,000 shows that it's not all interest rates. People are still willing to allocate to the asset, even with high interest rates. And then I also think that there's this element of we're in the summertime and kind of these sideways summers. If you look at the stock market, historically, people have always said invest till May and then go away. And I think that we've seen that in Bitcoin and crypto over and over again, where there's these explosive periods of price movement from January to about May. Summer is usually sideways. And then towards the end of Q3 and into Q4, we get these kind of explosive parabolic moves again during bull markets. And so I don't think necessarily this is something that should be surprising. I think people who are coming into the market for the first time, specifically people buying the ETFs who maybe haven't had Bitcoin before, they haven't seen the volatility, this may be something that is much more volatile than they're used to. And therefore it feels like a 15% drawdown is kind of Armageddon. But in the Bitcoin world, we usually see 30% drawdowns in bull markets, multiple ones. And so this is actually a pretty small drawdown in comparison to those historical averages. I think there's a couple of different things. First, seeing a couple of large organizations go ahead and allocate to the Bitcoin ETF. Estimates right now are about 80% of those ETF inflows come from retail. And so we still have yet to see very large organizations, very large RIAs. There's still many trading platforms where the Bitcoin ETF is not even turned on yet for kind of private wealth clients. And so seeing some of that happen, I think, can be a potential catalyst. I also think seeing a sovereign wealth fund come out and say that they've started to buy Bitcoin, whether it's via the ETFs or spot, would be quite impactful. I think that seeing President Trump get elected As it stands right now, he seems to be the more pro kind of Bitcoin, pro crypto candidate versus the current Biden administration. Maybe that changes, but given what we know now, Trump being elected, I think would be tailwind. And then lastly, frankly, I think there's this element of as we head in towards the end of the year here, the Federal Reserve is going to have to start making some decisions. And, recently it came out, David Rubenstein, the co-founder of Carlyle, said that he doesn't believe the Fed is going to make any interest rate cuts before the election. They don't want to kind of meddle in politics. There's many other people who believe, no, that's exactly why they're going to cut rates, kind of going into the election. Regardless of what they do, it'll have an impact. And so if they cut beforehand, that's likely to be positive for Bitcoin. If they wait till after the election and then cut, that'll be positive at that point. But regardless of whether it happens in August and September or it happens in November and December, it is very unlikely, in my opinion, that we have seen the top of this Bitcoin bull market. And it's much likely that we will go higher at some point over the next 18 months. What we know from a kind of public stance perspective, there are now multiple nation states that have had, dipping their toes in to the market. They're buying Bitcoin, down in El Salvador. There's a lot of countries that are now starting to do these joint ventures where they're actually doing mining. So you see in the UAE, you see this in various African countries. You even see it in the United States to a degree where people are using certain power sources to go ahead and mine. And then I think you're also starting to see in countries that maybe people wouldn't think about, you're seeing politicians come out and say that they own these assets. And so whether it is the actual government themselves or it is the individuals who govern holding the asset, I think that really has an impact on kind of the population and what they're going to do with their financial assets. And so having a sovereign wealth fund come out and say that they've bought Bitcoin, I don't think is something that's going to be shocking in the sense that, like, of course it's going to happen. But when it happens and which sovereign wealth funds are the first ones, I think will have an impact and be a catalyst. I also think that there's a very interesting conversation around the fact that central banks around the world have watched what the United States has done from a financial sanction standpoint in the Russia-Ukraine conflict. And the stance that the United States took towards Russia and some of their assets, I think has caused a lot of central banks around the world to say, well, maybe we should diversify some. Maybe we shouldn't sit in US dollars or, completely in treasuries. Should we be buying gold? Should we be buying Bitcoin? I do think that kind of sanctions hedge risk is something that people, are kind of discounting, but will definitely play into this calculation for many of these governments in the coming months and years.
Pompliano touches on the political landscape and its potential impact on Bitcoin. He mentions that the upcoming US presidential election could be a significant factor, with former President Trump being seen as more favorable towards Bitcoin compared to the current administration. The decisions of the Federal Reserve regarding interest rate cuts, especially in the context of the election, could also play a crucial role in Bitcoin's price movements. Regardless of the timing of these cuts, Pompliano is optimistic that the current bull market for Bitcoin has not yet reached its peak. The discussion moves to global adoption, with Pompliano highlighting how various nation-states are beginning to embrace Bitcoin. Countries like El Salvador have already made Bitcoin legal tender, and other nations are exploring similar paths or engaging in Bitcoin mining projects. He believes that central banks around the world are re-evaluating their strategies in light of recent geopolitical events, such as the financial sanctions imposed by the US on Russia. This re-evaluation could lead to increased diversification into assets like Bitcoin and gold.
When MicroStrategy came around, he said, I am not in that business, but I'm going to hold this asset on the balance sheet. And obviously people saw what he was able to do in terms of expand his balance sheet, use the debt markets, issue equity, really drive quite an attractive financial return for his shareholders. And so then you quickly got Elon Musk and Jack Dorsey with both of their respective companies to do something similar. But it kind of went quiet after that. We didn't really see that many other companies doing it. We went into a bear market and everyone said, hey, well, maybe it's just kind of, 1 to 3 companies and that's going to really be it. Now what we've seen, though, is a spattering of these businesses, and they're not just even in the United States. You have DeFi Technologies out in Canada, which we've been pretty heavily involved in. You've got MetaPlanet out in Japan, who's putting Bitcoin on their balance sheet. You have a biotech company called Semler Scientific that's doing it, I think, out in California. And so, 1 is a data point, 2 is a line, 3 is a trend. Well, I know just there of at least 5 or 6 companies that are not in necessarily the business of Bitcoin and crypto, but they are saying to themselves, we are going to put these assets on our balance sheet. We're going to take cash and convert it to Bitcoin. And so those are not 5 big companies, right? It's not like it's Facebook and Amazon and Google or Dell. And so all you need is a little bit of momentum. And I don't think that you're going to see the MicroStrategy playbook played out where it's 100% of a balance sheet. I think it's more likely you're going to see, 1 to 5%. And they're going to say, well, we're just doing it as a diversification, no different than we would just buy treasuries, buy gold, buy something else. And so if you get, let's say, 1% of 10% of corporate balance sheets in America to go and buy Bitcoin, that's a lot of buying power. And so for an asset that is, $1.2, $1.3 trillion in market cap, you don't need that much buying power to continue to move this thing upwards. And so I just think that is, kind of this, I think of it as it's infiltrating the public markets, right? It's one company at a time in a very decentralized way. It starts with the small companies, similar of a bottoms up approach. But if you said to me, do I think one of the Mag 7 stocks have Bitcoin on their balance sheet 20 years from now? The odds tell us probably, which would be a pretty incredible move, in 35 years to go from invention to having infiltrated some of the largest company balance sheets in the world. I think that the institutions will sell, right? They're obviously holding debt today because it's paying over 5%, and that's a very attractive rate. But as that rate goes down, they are going to look to move somewhere else. And as markets work, rates come down and risk assets will take off. Now, what's unique about this situation is that rates were hiked at the fastest pace in history, yet stock market is at near all-time highs, if not all-time highs, and Bitcoin has been flirting with new all-time highs as well. And so when you look at these, it's basically like investors have said, we are going to go into the market and we are going to allocate to these asset classes, and we don't care what the rates are, right? The rates are a lie. I don't care that we're in a high interest rate environment because inflation is not under control. I recently wrote about, Larry Summers and a group of economists came together and they did this big study, and they said, well, one of the things that is not being included in the CPI analysis is the cost of borrowing. If you have some sort of variable debt, or you are taking out a new mortgage or a new car loan, the cost of that asset has now skyrocketed from 2021 till today in 2024. And so if you start to include those numbers into the calculation of inflation, what you find, according to their study, is that inflation did not peak at 9%, as the Bureau of Labor Statistics told us. Instead, it peaked at over 18%. And so the question is, what is inflation today? And so if inflation is actually something elevated above 3-4%, then investors are correct to allocate to these assets that benefit from the inflation regardless of the interest rate. And so it's this very kind of breaking of the historical view of being a 60-40 global portfolio. If you're holding bonds for the last 5 years, you're losing. It has been a horrible investment in terms of the capital appreciation. Instead, what people are doing right now is they're chasing yield, but that yield actually may not be a real yield. If inflation is actually 5 or 6%, sure, and you're only getting paid 4 or 5%, then it's not what you think it is. And so there's a lot of things that I think the market is kind of, calling maybe the Fed's bluff, if you will. And so, I tend to believe that the market is right more so than the economist.
Pompliano discusses the trend of corporations adding Bitcoin to their balance sheets, a move pioneered by companies like MicroStrategy. Although this trend has slowed down, he notes that several smaller companies across various industries are still adopting this strategy. He predicts that even a small percentage of corporate balance sheets allocated to Bitcoin could have a significant impact on the market. This gradual, decentralized adoption could eventually lead to Bitcoin being held by some of the largest companies in the world. Pompliano discusses the relationship between interest rates, inflation, and market behavior. Pompliano argues that despite high interest rates, investors continue to allocate to risk assets like Bitcoin and equities, indicating a shift in traditional investment strategies. He cites studies suggesting that inflation might be higher than officially reported, which would justify continued investment in assets that hedge against inflation. This trend challenges the traditional 60/40 portfolio strategy and reflects a broader shift towards assets that can offer real returns in an inflationary environment. Please like and subscribe my channel.